G'day everyone, welcome back to Pete's Investing. This is August 17, 2023, and this is the US S&P 500 update. On the daily, it's actually had a couple of pretty bearish days, and so far today it's also looking bearish at the moment, and that's currently reaching from this Fibonacci range. It's come back and reaching around the 38% level, so not a huge drop yet. Now if it breaks below the 61%, that's always a key area. That's something we need to look out for. If it drops below that, we're going to see a much bigger decline. You'll notice on the CCI it's still falling. Likewise on the Stochastic it's also falling off and still declining, so still pretty weak, and we're probably going to see further declines on the daily at the very least. We did have a divergence back here, a bearish divergence versus the price, and we did say look out for that area, as well as this resistance up there at 46.07. It did bounce down from there and broke through to this initial target area. Now looking at the hourly chart, you can see here since our last video on this dotted line, we did have a bullish divergence on the CCI versus the bearish on the price, and we did project this target area to be hit, and it actually hit it perfectly at the 38%, and from there it actually retraced back down to the downside. Now just to emphasize, these divergences don't mean they're a full-scale reversal. It just means it could be a bit of a retrace, and this is a perfect example of that. It retraced, hit our divergence, hit our initial target, and then bounced back down to the downside. So always take the closest Fibonacci range for these divergence targets. Sometimes they break through, like you can see this one. There was a bearish divergence on this double top on this CCI versus the price. It broke down, hit our initial target area, but it broke right through. Now we can't project that, how far that's going to drop. We simply take the closest Fibonacci range. Now in this case it's kept falling. It broke below the 61% level, which is always a very key area to look out for. And looks like it's going to take further declines. Now having said that, we've got this, as you can see there, that if I move that trend line from where that previous divergence was projected, that is still above our entry point. So theoretically, we may still see a bit of a retrace from that point on. So if the price bounces from here and the CCI continues upward slightly, then we may see a bit of a initial retrace somewhere in that area there. Again, not a full-scale reversal, just a retrace at the very least. So we'll keep an eye on that. We just extend that Fibonacci range, and in which case we'll draw a new target area, because that's already been hit. So a new target area would be somewhere in that range there. So anyway, we'll keep an eye on that. We're not saying go long there. We need to see that break above there, and we need to see the price also break probably above some of these moving averages, probably the 20 or the 50. We'll see how they form. So to understand how to trade some of the divergence strategies or even trend trading strategies, support us more on the Patreon page, where we also look at weekly scans of stocks, currencies and commodities. Thanks for watching, and see you in the next video.